Morning traders, Friday. Oh, it's been another bonkers week, another long week. Here we are back. It wasn't me singing, Bran, you'd know about it if I was singing. Yeah, I've only got a voice for the football terraces, not radio or anything like that. But yeah, here we are, Friday at last. I can't wait for the weekend. But one more day to go. Happy Friday, everybody. Right, let's get stuck into it. See what's going on in the world, usual shit shows and everything else going on. I'm going to kick off with a bit of data. Let's get rid of my ugly mug there. CPI out of Japan. This is the national CPI number, comes after the Tokyo CPI number, which is often released first. A little bit softer on some of the numbers, though not as much as expected. National core CPI coming at 3%, was expected to drop to 2.9, so a bit better than expected. Headline CPI coming in 3 pips lower. One of the core measures, though, ex-fresh food and energy, actually went up to 2.6% as expected from 2.5%. So, as mentioned, we've seen this a little bit in the Tokyo numbers, so not really a surprise. Inflation still north of 3%, which is what the BOJ want. Although, as we know from the BOJ meeting, UEDA sees underlying inflation in the 1 to 2% range at the moment. So they want to get that up a bit, and keeping numbers like this, we'll get it up there eventually. We've had the second round announcement from Rengo on the Shunto talks, the wage talks, and second round data shows that the average wage hike is coming in around 5.40%. That's slightly down on the 5.46%, but still well up over last year. I think we've got one more round of agreements and adding it all together. So we're not done yet. As long as it doesn't collapse too far, everything should be okay for seeing bigger wage gains in the next financial year. Riksbank's Thedéen said that the bank will act on unforeseen developments, talking about trade and whatnot. It expects a moderate impact on the Swedish economy from tariffs. Expects isolated periods of inflation around 3% in 2025, so maybe some jumpiness in inflation. ECB's Muller says the economy is expected to gradually improve. There is an upside risk for inflation on tariffs, and you'll see when I read the rest of these comments that not everyone is expecting the same thing from tariffs. Big Dove Centino says he doesn't see prices rising significantly as a result of a trade war, and the tariff war may end up having negative impact on prices. ECB's Not says he's completely open-minded about the April meeting. There are many unknowns. And there's uncertainty about the direction of inflation, whether it's been higher than it has been in a long time. Says it's very hard to predict where interest rates will go, as it's hard to say where inflation will go. We are almost at the level of neutral interest rates, and we have almost mastered the inflation problem. Inflation victory lapper Vilroy says inflation impact of Trump's policies will be small for Europe. He's not worried about inflation, but says the ECB has the margin for cuts. German upper house approved the debt reform thing, opening the door for this 500 billion magic money tree fund. That was worth about 8 pips to the euro when that announced. So we're well done with trading that, it seems. Our mates at the Bank of England, they held rates at 4.5% as expected, but the vote was a bit of a surprise. We were looking to see if it was going to be a bit of a dovish tilt, a more dovish tilt than expected 7.2. It went the other way. They voted 8.1 to keep rates on hold. So a very undovish vote there. Man hopping back over to the uncut side, Dingra voting for a 25 cut. They kept the message in the statement that a gradual and careful approach to moving policy restraint remains appropriate. There's no presumption that monetary policy is on a preset path over the next few meetings. as is usually the case with the Bank of England. They're all over the place with worries. They're worried about growth, worried about employment, worried about global events, worried about wages, worried about inflation, and have absolutely no idea how to deal with any of it. Bailey popped up on the wireless later on saying the forecast is for a very gradual decline in inflation. It says the inflationary impact of tariffs is ambiguous. We're very carefully watching for any signs of an increase in redundancies that we've not seen in early indicators. Then he's waffled on about how inflation is likely to come down, then whilst adding that it might go up later in the year anyway. So all around the houses, and we're back where we started, and no one's any the wiser. After that, immediately after that, money markets had a small repricing. They still see 2 cuts coming by the end of the year, but it was down from 54 basis points to 51. Then later on, we had a bit more of a carved down rate futures showing 43 pips of cuts versus 52 by the end of the year. So just coming under that 2 cut mark. As far as the May BOE meeting goes, it's now a 60% chance of a cut then versus 70% previously. Right, we come into this morning's data. If I can find it, there we go. Out of the UK, we had some public sector borrowing debt numbers coming in, and not looking good for Rachel Reeves, the Chancellor, who's got this spring statement next week. Public sector net borrowing jumping to just under 11 billion. Not a good number there. The April to February budget deficit, and this is one of the big numbers that we need to keep an eye on, that came in at 132.2 billion. That's way above the OBR target there, the fiscal watchdog, of 111, just under 112 billion. So no headroom for her nibs, and budget deficit coming in. It's making it pretty tight for her to do anything next week in terms of getting growth moving, closing that gap. It means she's got a very, well, next to no wiggle room in that at all, unless she decides to embark on some big cost-cutting measures and maybe some tax rising measures, which apparently she's ruled out from this statement to kick it to the autumn budget. Either way, she's got a bit of dancing to do to get ourselves around these numbers next week. And to make matters worse, the OBR are apparently going to halve their growth forecasts in the lead up to Reeves' statement next week. Again, just making it very, very difficult for her to manoeuvre in any which way or form. Our ONS, though, isn't making things easy for anyone. Last week, they announced they were kicking the trade data from the 14th of March because they couldn't get their numbers right. This time they fucked up the PPI data, so that's all wrong. So that's PPI data or inflation data, trade data, and jobs data that is now all screwed up by the people who are supposed to be able to count this crap. Don't ask me what that means for GDP. It's probably going to screw that up as well, because most of the data that's feeding into it is a load of old drivel. So I don't know what's going on over here. It's absolutely crazy, but there you go. So don't trust UK data as far as you can throw it for the foreseeable future. A bit more reliable data, depending on whether you think it's reliable or not, came yesterday. We had obviously initial jobless claims. That's still doing nothing. Little bit of a creep up again towards 1.9 on continuing claims, but still nothing to be bothered about. Unless that's trending over 2 million or something like that, then we can pay attention to it. And unless initial jobless claims are sort of trending over 350, 400,000, then we'll worry about it. So nothing from that. Fully fed manufacturing index came in higher than expected, 12.5, though it was down on last month. The numbers underneath quite hefty as well. Prices paid coming in at 48.3. That's the highest since July 2022. Prices received also moved, actually came down a couple of points to 29.8 from 30.1. So maybe a bit of a margin squeeze there. Employment, that jumped as well to 19.7. That's the highest since October 2022. Although new orders was positive, it was well down on last month. So overall, bit of inflationary pressure seen again in these surveys. We're seeing a lot of this type of move now in the private surveys, in the PMIs, in the regionals, in the consumer expectation surveys. So, you know, I know people dismiss some of the data points we're seeing, like the Michigan, but trends are what you're looking for. And so we're seeing higher prices or higher price expectations coming in a lot of data now. Okay, it will not get ignored by the Fed. Powell said he was ignoring a bit of it, but he's keeping a close eye on it. Existing home sales later on, all tickety-boo. Again, another housing data point in February that's showing everything's fine and dandy. So those were up 4.2%. House prices also holding up 3.8% from last year, up 4.8% from last month. BOC's Macklem was out and about. He's watching for the pass-through of tariff costs to consumers. Though says they haven't seen any much of that yet. He says that March CPI is still seen around 2.5% based on their forecasts. Says that the jump in the February data that we saw hasn't fundamentally changed their view, as they expected part of that to come into the February report. But he says that the February data has got the BOC's attention. Speaking about the trade impact and everything else, he said that if their MPR, that's their monetary policy report, aka their forecasts and whatnot, he said if they were released today, I don't think it would have a single central projection. And forewarned us that the April MPR, that's at their next meeting, could have a range of outcomes. Okay, so this is a central bank saying they haven't got a clue what's coming from all this trade stuff, so we can't draw one path and give one outcome for the economy. So there's going to be several possible outcomes. Just going to make everything more muddy the waters a bit more. Energy Secretary, US Energy Secretary Wright says the US would be buying oil today for the SPR if it had approval. So that's a little bit of a bullish tilt for oil markets. They're ready to fill it up again. We've got this US-Russia next meeting that's going to happen. Well, there's talk that some people are meeting this weekend, but it looks like most or the bulk of the talks are going to happen from next Monday. So Monday and Tuesday, according to the Kremlin, that US-Russia talks are going to be held in Saudi Arabia starting on Monday. Zelensky was speaking to the EU Council. He was saying that Russian strikes on energy have not stopped, despite Putin claiming his readiness to halt it. Since the no ceasefire on energy truce thing, they've been busy back and forth again. There's been a big pipeline that blew up in Russia, oil pipeline that blew up in Russia, which Ukraine said that Russia destroyed itself, just so it could blame it on Ukraine. Russia is conducting an investigation saying that it was Ukraine. So this shenanigans is all still going on. It's all a load of crap at the moment, and that's how we thought it was likely to pan out. It was just going to be a complete mess, and a complete mess it's going to be until we get something concrete. But let's see where we go. Trump has again repeated that he will be shortly signing the deal with Ukraine on rare earths, so that's still to come as well. And I know Blake mentioned what happened in Turkey yesterday on the Face Show with leader Erdogan basically arresting his opposition rival. That got dollar Turkey rallying higher, while the Turkish central bank tried to fix that by hiking rates at an emergency meeting to 46% from 42.5%. Yeah, that worked. Right, that's it on the headlines. We'll have a quick look what's coming up today. Not an awful lot, I don't think. We've got Canada retail sales, and that's your lot, really, from the US session at least. So just keep an eye on those. This is the January numbers, so we're just turning the new year as far as Canada is concerned. But we also get flash numbers for February for whatever they are worth. Don't worry about Eurozone consumer confidence. That will be a negative number, and you can take that to the bank. What we do have, though, is the muzzles are off the Fed heads, so they're all out and about. They're going to be speaking today, and we got a couple of those, including Fed's Williams, as you can see there, plus whatever Trump gets up to and decides to tweet from the toilet. So a bit of a quiet Friday to end the week as far as the data goes. So it's going to be headlines, if any, that drive most of the market moves. Right, let's have a look at the old market moves. And again, as usual, and I don't mean the usual suspects, you lot, the reg, I will look at gold, obviously. But if you want anything looked at, then stick it in there today. Or if not, I'll just give you my thoughts and then we'll call it a day. Anyway, euro dollar. Now this one's building up for something. The reason it's building up for something is because a lot of people are eyeing this level, the 107.60 level, which has been in my range of levels that we've been messing around so far. It's basically 107.60, 108s, 108.30, 108.70, 109s, 109.40. Okay, so they're my main levels, even though I've got these little bits and pieces to look at intraday. A lot of people are targeting this level, either people who are short, want to take profit, or people who want to get long. So it's getting a bit of a target painted on its back, okay, which means you can get some shenanigans around that. So when you get a lot of people looking at that and they want it to do something for their trade, it either doesn't happen or it completely breaks down and messes everyone up. So just be aware that this is gaining a lot of attention at the moment. So it may work or it may not, depending on what players want to do with it. If the market thinks there's a load of longs waiting to buy the dip to there, then you've got to be wary of a risk that someone decides to blast it through that level, knock out everyone's stops, and then takes it back up again. In the meantime, we're back messing around in the zone, so we're not yet ready to break away from it. Okay, this 108.30 is just becoming a little bit washed out. Okay, we're not making a decision here at the moment. This dip to, what was it, 108.14.15, just matching this low, which was a bit of a step up from the 108 previously. So even if we do get a hold here, you know, you still got a couple of levels to get through before things start looking, you know, more bearish, shall we say. And with the lack of data today, and it's going to be headlines driving, you just got to be careful. I don't see us moving anywhere massive in this one. So if you do get a break and you want to be short or you're getting short, just be careful that you know, we don't run into trouble 10, 15, 20 pips. And that's as far as it goes. So if you want to scalp around, be nimble. Okay, don't be looking for 40, 50 pip moves today unless it's headline driven. Same on the upside. Bounces, you know, this bounce off of 15, we got back to 60s, right in the middle of the zone, ran out of puff, came back pretty quickly. So that's where you want to be looking at as your range today. 15.20 and up to probably 55.60. And take your moves from that, and then obviously we've got the 70 above it. This is dragging on as well, so a bit of a longer term view, you know, only talking the last couple of weeks. This is dragging on without making any, you know, busting up to the high side. So everyone who's scrambled to get long, square off shorts and get long in here, we still need something more to get us moving higher again, and at the moment that's not coming. So The longer that goes on, the greater the chance that we do see a steeper pullback, which then again puts a bit of pressure on some of these areas, because if everyone up here starts folding on longs, you may not even stop here. We may get a move down to the 107 level or something like that. So just be careful. These things tend to go on the clock. Arnis, yes, I'll look at gold, mate. And pound CAD. Oh, bloody hell, pound CAD. You and your pound CADs, you lot. Let's have a look. Probably not a lot on my charts here. Nothing at all. What are you up to, Arnis? Let me know. You're long, you're short, whatever. We've had this, obviously, this decent break above. It's going a bit wider. That was the last time I measured it. As you can see, I had these fibs up here. So we've broken above this high anyway. Not even had close to a retest at the moment. You're looking for short entries. Okay, so you've got some evidence building up. It's not conclusive yet. This is following a lot of, it looks a bit similar to cable. So you can take your cues from that. So if you want a short, you've got a few levels to look at. Okay, we've got one there. Okay, it was a former top. We had a couple of goes and we had a break. Then it held a little bit. Then we messed around. It was support. It was resistance. We broke, came under, came under. Now we've had a bit of time under, and the first place you run into trouble is against that level. So that's 186.50s. Okay, so that's a place you want to look potentially for shorts. Then you can probably have a look at these. Let's take that out, magnet off. Then you can probably have a look up towards that area there, 87s, and then obviously peg the highs up here as well. So if you're looking for shorts, you've got some levels. You don't need to be wrong. Okay, you don't need to be 70, 80 pips wrong. You don't need to be short in here and have a stop up there. Okay, you can just do little scalps if that's the way you want to do it. Then maybe if you get in a trade, you can milk it and see where it wants to go. We possibly have a bit of a support zone coming in here. Again, this is twofold. Okay, so we've had, this is a form of resistance again. Then it was support, then we messed around, then it was support, then we had a break. We're holding below it at the moment, okay? So you could even lean against this for a bit of a scalp short if that's the way you want to look at it. And we've also got a bit of, let's just refine it. We've just got a bit of an area just above that 85.76, okay? This is just short-term intraday stuff, okay? So you know, if you're looking at shorts, yeah, you can lean on this level, maybe a stop above that level. And if we're creeping up there, then your next level is not up to there. But just keep an eye on support just into these lows, the 185s, because that's where you might find any selling interest running into trouble. You can always look to maybe trade a break on that one. So there you go, 2 minutes, and you've already got 1, 2, 3, 4, 5, 6 levels that you can potentially look at and trade around. Okay, depending on how you want to do it. Just bear in mind these are short-term levels. Okay, you don't need to be betting the farm on these. You know, you can get in little pieces, add little pieces on the breaks, add pieces on the retest, build up a bit of a core position, and see where it wants to go. But you know your range. No problem. And hello, Ali. Yep, I'll look at some of those bits and bobs in a minute. Let's get into gold to keep Mr. Derej and everyone else happy. So what's been going on in gold? It's looking a bit messy. We've got a bit of a potential here. Topping potential. What was that going? Coming in just around that sort of area. So now the 45 area, shall we say. Because yesterday's rally, you know, we couldn't get back up to these highs. So we've had this where we've had a point, resistance point that's broken, tried to support, then we've come back under. Now it's resistance again. Okay, this is the similar thing that I pointed out in the euro dollar. This is a similar pattern that I've pointed out in dollar yen around 147. It can be a significant pattern. Okay, you can maybe look at it as a head and shoulders, whatever. Okay, I'm not really interested in the head and shoulders because people who trade head and shoulders will be trading it from here. Well, here's some evidence to say you can trade it from here, let alone down here. So you've had a high, a new high, hold the old high. Okay, that may be significant from here. Now, if you weren't looking at shorts off this level or aren't short off this level, then yes, you may have to look at this level now, the 2025 level, because it has held pretty well over the last few days. So a move under there would likely suggest we're moving back down to 3,000. But on the flip side, if we maintain a hold down here, that's going to keep all these highs in play. But watch this 30.45 area. If we hit that again and can't get through, then there's maybe a good chance that we are going to be heading home and maybe going to see a test of that 3,000 level. Okay, so you've got some clear lines. This one in the middle might have to pull it out 30.38 just because it's getting a little bit messy at the moment. Let's bring that in a bit closer. So it was an area that I was looking at to see, is it going to have any main reaction? It did, but then it just got a bit washed out. So I'll keep it in there for a little bit longer just to see if a rally gets up there and hits it there. If it does, then we're potentially setting up lower highs and lower lows. Okay, so that still might be a key level, 30.38. So you got three numbers there: 2025, 38, 45, and then obviously the highs. So you can trade against those as you see fit, my friends. Right, Ali, I haven't seen you much this week, mate. And now you've stacked up your trades for me to go over. What are you up to today? Short Aussie dollar at 95. Let's have a look at the old Aussie dollar. Okay, so you're short 95. The bounce is looking weak off this level, and I spoke about this yesterday. This zone, it's one of those zones that, you know, we mess around in a lot. We've done so again. We held the bottom the other day, got a bounce that looked very, very weak compared to, you know, this other failure again up near 64s. It's trying to hold the top of this zone. So you being short, you're looking okay. We're holding below 63, the figure, so it's looking okay, mate, as far as that goes. You want it to get under here. If you get under here properly, then, you know, at the very least, I would expect to move down to the 70s. But given that we've already bounced them there, and if we come back there pretty quickly, that would potentially indicate that we might be heading a bit lower. So for me, if I was short, this is your level. You want to maybe look at taking some profit and then waiting to see whether it continues or whether we bounce from there. And then you can decipher your trade from that. What else you got going on? Long dollar CAD. Long dollar CAD at 30, stop loss at 90. That's a bit in the middle for me in terms of my levels. I've got this level here at 40s, which again, it's another one of those ones where you get a bit of action turning around, particularly when it's quiet. So we're not doing much and we can't get through this 40 area, but we are holding just above the 43 figure. Again, another intermediate line. I think this one, if you get a crap retail sales from Canada, you probably get your rally for this one. Whether it would be enough to get us back up to that 44 level is another question, but you'll be looking for poor retail sales. But I don't know what the impact will be. Maybe if you get a move back up to this 65, 70 area, that's somewhere to look for taking profit. We are going to be switching very quickly next week into trading the April deadline, all this tariff stuff again. So we're potentially going back to this scenario where we may get some wild moves. Although I'm not expecting, as you can see, we had this the first time around back in February when all those tariff effects were going, big wild moves. Then the second deadline, beginning of March, we didn't quite get as wild moves. The market is coming to grips with how to trade this. Okay, if tariffs come, it isn't going to be a shock like it was back in February. So we're probably going to see limited reaction again to any negative or even big positive headlines. Okay, we've come through all this tariff crap, Trump taking over everything, but we cannot break out this zone for any length of time. Okay, so we might get more of these little extensions and these little, you know, short-term moves, but are we going to get anything that takes us out this zone and gets us moving somewhere properly? Because at the moment, it doesn't look like it. So I'm not inclined to trade much in the middle here. I didn't trade this bounce, but I would potentially look to edges. But as I say, we're running into that next tariff deadline. So you've got to keep that in the back of your mind as far as that goes. Right, what else should we have a look at? I'll just go over a couple of bits and bobs I'm in. Quick update on Aussie Kiwi, bit similar to Aussie dollar. We had a bounce after getting down near the 109 figure, but it's come back pretty quickly, now holding back below 109.50, which is good news for me. Now holding, or maybe looking to hold below this 109.30s level. Have found a bit of support again off this line though, 18, so it's just maybe buyers protecting that prior low. So for me, I need it under 109 and holding under 109, and then maybe I can start thinking about a move back down to the old big magnet. And just to give you an idea, what I'm mostly trading is this big wide range that we've got here, or trying to trade this big wide range that's been going on for years, and we've always come back to this 108 level. Okay, that's why we call it the magnet. We haven't managed to get up to the top of the range, but we've got up to some of these high points. You could call it maybe a intra range, okay, which is what I was trading off. So below 109, then I'm going to be looking a bit hopeful that we get back down at least towards that 108 level, and I'll start bringing my stops down further on that trade. I managed to have a little bit of a dab in oil yesterday, which didn't go very well. I managed to get stopped out overnight, just a small play. I was just trading up against these highs yesterday. I started a bit early around 67, 80s and just got pinged overnight. As I say, there's maybe a bit of noise from that SPR headlines, and there was stuff going on in Iran and the Venezuela thing, and there's all sorts of stuff going on. But it is, as I mentioned, just in a bit of a uptrend. Okay, it's all slow, but we're just creeping up. You know, the lows are getting higher, and we're just happy to make, you know, new highs. Doesn't mean we're going to be zooming up to 70, 80 bucks or anything, but it's stopped going down for now. That's what I would say. Okay, we've had all this move from the 80 buck mark, and it couldn't really stop anywhere for any length of time apart from here, and then we still kept going down. So we may be having a bit of a pause, which could mean we get a bit of a rally up towards, you know, 70s or something like that. But I'm certainly not expecting anything up here unless there's something geopolitical going on. But I lost on that one, but that's trading for you. Another one, stocks. I had a little dabble short yesterday just because we were up testing these highs and couldn't get through. Again, a similar short-term uptrend off of a potential bottom. Okay, so it looks similar to oil. We've got a lot of these patterns at the moment where we've had decent moves that are now sort of pausing. The fact that we couldn't make new highs in this move yesterday just might be an indication that we're breaking the higher highs pattern at the moment. But really, this is my key area, 56, 56.20. Okay, it's a bit wide, so call it around this old 50 retracement here. If we're breaking back below there in 56, okay, it's potentially going to invalidate this move, this uptrend. Okay, and then we're probably going to be heading down towards the lows, and in which case I'd keep an eye on this little zone here, 55.60, because it's an old traffic zone. Buyers from down here, this may be where they want to be parking the bus. So we could break this trend, but just develop a bigger one or a more rangy one. So let me get my old pencil out. We might see something like this happening. Okay, if we get something like that, then we might get something like that. Okay, and then we just develop a bigger channel than what we've got going on at the moment, which is more that, if you like. Okay, so that will be a key level down here. If we're through that level, then there's a good chance that we're going to at least hit that low, if not continue lower. So we're finding decent dip buys, but we're also finding still decent rally sellers in that. So we're not out the woods yet. Could go up, we could go down. If we do go up, watch out for this 38.2 fib 57.50, because that will be the first real test of this trend here. Now, I did show you gold and that little short-term topping action. Let me just show it to you quickly again, and then I'll tell you what I mean by patterns. So remember this. So we've got the jog on. Come on, Ryan, get it together. So we had the top, the break, respect the old top. This is what I meant when I was talking about dollar yen and what we saw around 147. Low, new low, holding the old low, which happened to be a big level on its own. Okay, this is what you can get on this move. So this is the opposite way of gold, and then you get a big rally, or in gold you could get a big drop. But these are the patterns you want to look for. Okay, they happen different time frames, different assets, different pairs. They don't all look as clean, they don't all look as nice, but you know, that's the sort of price action you want to be looking for when you're looking to at least counter trend a move or trade counter trend. Okay, so we had a bit of a rally in yen pairs, undoing what we got yesterday. I don't know if that was just due to Japan coming back from their little holiday yesterday, but they're back in the swing of things now. Really, that just makes things a bit more balanced again. So we've had a bit of a down move. We've had this up move, we've had a down move, and now we're back sort of bang in the middle of it. So looking at the levels, this 150 still looking key because we can't get above and hold above it. But again, we're just in another uptrend that isn't looking like it's ready to break just yet. So this 148 is your key level down here. We're back above this 148, 80, 85 area. So just watch that intraday. If you get a test down to there, then that will keep the bullish momentum going, and a bounce there could be the one that takes it up through 150. But again, lack of data, I think we're just going to be looking for headlines and anything like that. Arnis, what 3 MAs are you using on those 15-minute charts? I use the 55, which is the brown one, the 100, which is the blue one, and the 200, which is the green one. I don't usually trust MAs, or I don't put much faith in MAs for anything under a 4 hour. Okay, they're not moving averages. I tend to mainly use on the bigger, higher time frames, like the 4 hour, daily, weekly, things like that. Obviously, they stay on whatever time frame when I switch the charts over. But you won't find me trading a 15-minute moving average on anything. Okay, just because it's too noisy. Okay, if you're a scalper and you can pick something out of it, you know, be my guest. But I don't tend to look at MAs because of that. MAs are sloppy. Yeah, it's not that they're sloppy. You've got a lot of noise in your short-term charts. Okay, you know, look at things like that in a moving average. You know, when the reason you look at averages is because they smooth things out. Okay, there's nothing smooth about moving averages on a short-term chart. Okay, there's something smooth when you're looking at a daily chart. Okay, it's not as volatile, and you know, you can clearly see I mean, obviously cable's a bit of a mess, but you clearly see you get opportunities to trade off these moving averages. Okay, not all of them, but it's like all tech. You look at the ones that are working and are having a say. You know, you can potentially trade off the 200 because it's had plenty of action around the 200. Okay, the 100 being a bit messier. You know, you go a long time without seeing it, and then nothing really happens. So it's like all tech. You look at the ones, if something's working often, and the same thing goes, whether it's a trend line, whether it's a horizontal line, whether it's a channel, whether it's a fib, whatever. Okay, if you see that something's working a lot, then you can use it, you know, and you look for confluences where things like moving into averages come up against levels where you get confluence. You know, here's my old 105, 105, 30 zone. And look, we've got that zone and we've got 2 daily moving averages in there. And then you can use things like the weekly to see what is happening on a wider basis. You know, look at the weekly, the 100 weekly here. Okay, can't get below it. And what we've got here, we've had a week above it last week, and we've potentially got another week above it this week. Okay, so this is where your moving averages become worthwhile looking at. But on a 15-minute chart, mate, not for me. Thank you very much. I'll leave that for your scalpers. Right, anything else, or I shall call that a day. Let's go through just some of your comments in case I've missed something. No, all looks good. Oh, Ali, your dollar Swiss. Oh, see, I've been talking about dollar Swiss all week and you've missed it. Oh, look at that. Moving averages, weekly moving averages, the 55 and 100, all around that sort of mid 88 level. And look where we've hit. So there you go. There's your moving averages in action. Let me go back, Ali. What are you doing in your long at 88.18? Don't know about that, mate. Let's have a quick look. So this I was talking about is a bit of your pivot line here, 88.20. Okay, we've now got a intraday or 2-day double top here, 88.40, coming off this rally. We couldn't get up to this high, around 88.60s. That we can't hold this 20 level is your bad news line. Okay, so if you're long at 18, you need to be a bit careful. Okay, we potentially got a bit of noise around here into the figure 88. So keep an eye on that, mate. Where you got your stop, 87, 88. Yeah, I think if you're breaking 88, then you're going to be in trouble on longs there. But just you've got a chance here. If we get another test of 88.20 and it holds, you may want to think about whether you think the trade might be worth getting out. Certainly, if you get a move up to 40, that's where you've got to be looking to at least take a slice. That's what I would do anyway, because you've got a confirmed couple of highs here. So anywhere up to 35s, maybe you think about taking a bit off, Ali, and then just tightening up your stop maybe underneath, just to protect the rest, and then see what it wants to do from there. No, Bitcoin, really? Want me to look at Bitcoin? And anyone asks me for Dixie, I'm going to shut the show right now. So there's your thing. What's going on in Bitcoin? Nothing. We're right in the middle of this. Okay, so we've got a bit of action around here, around this 82, just above 82. But otherwise, if you're not in anything at the moment, you want to use these as your key levels, 81s and what's that, 87.5. Short term, this is a bit of a level in here, 81, 85, 100, maybe even down to that area there, 84.5. So you can look at these two intraday ranges, or shorter term ranges, shall we say, round about something like that, which we're sitting in the middle of now. But otherwise, take your cues from that. If we're breaking up here, we might be heading there. If we're breaking down here, we might be heading down there. And then obviously take each of these as your last lines. Well, you can probably stick one across there, actually. A bit lower. There we go. Something like that. So yeah, we're in a tight zone. Take your cues from whichever side you go, and then look at these edges up here. Right, that's it. Done. Yeah, above 89. Yeah, well, above this high here, it starts at bullish 87.5. And then you can worry about 89. But these are your levels in the meantime. Right, that's it. All done for the week. Thank you very much for joining me this week, keeping me company while Mr. K's off and having to do this all myself, which I enjoy. It's never a chore, folks. We'll be back next week, and I've got several guests lined up as well. Mr. Brown will be coming in. He'll be joined by my namesake, Ryan, from Peak Suite. So there'll be a bit of banter going on. And then we also got Harry from Large Court coming in after Reeves's cock up or whatever she spins up next week. So we'll have a review of that. So lots to look forward to. Have a wonderful weekend, everybody. Trade safe. And I'll see you on Face. If not, I will see you next week. Thank you very much.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.